Investors love stock splits, and that is because usually the stock gains a year after that split is announced. Or does it? What is it about stock splits that we should understand, and what are most people missing? Let's go ahead and break it down. Now, we talked a little bit about stock splits before, but I do want to give you a very quick refresher. A stock split is what I call a cosmetic change to a stock. So for example, I have one share for $100 and I'm going to do a 4-to-1 split. That now means I have 4 shares for $25. 4 shares at $25 is still $100. Nothing actually changes. It's like me taking this light behind me and changing it to blue or green. Same amount of books in the background, the size of the room hasn't changed, I haven't changed. It's still the same thing, but it looks a bit different. Now, why do companies do this? Well, back in the day, I mean like, the early 2000s, before Robinhood existed, companies used to do this to increase the pool. That means they get more investors to buy the share and make it a bit more affordable, because back then you used to have exactly, if a share price was $100.50, you needed exactly that amount to buy that share. There was no buying a half share. There was no buying a 0.25 shares of this company. You either had the money or you didn't. So it feels like, those stock prices don't matter as much anymore, and you might not have to do a split, but companies still do it. We saw Walmart do it just a few weeks ago. We saw Apple, Amazon, did Microsoft do one? No, Microsoft did not do one. It was Microsoft, Amazon, Google, and Tesla that did it in, I think it was 2021. So what's actually going on here, and does it actually increase the share price at all? Well, we know from 2022, the answer was no. The company that did the split in 2021 did not see that typical gain. But studies have shown us that between about 1990 and 2021, that stocks that announce those stock splits and actually do those stock splits, about 12 months after, they see an 8 to 18% increase above what the stock market already does. So let's say the stock market gained 1%, where you're getting that 1% plus another 8 or another 18. Now again, depending on the time frame they're looking at that and when the stock split and all kind of stuff, you are going to get a range, and that is an average, right? But there is a bit of a flaw or a little bit of context that you do want to know about that. Here's the thing. In the early 1990s, especially in the early 2000s, we used to see close to 200 stock splits per year. 200. You know what it is today? Just 20. We are seeing an average of just 20 stock splits per year. So the data that we used to have about 20 years ago is not what we have, with a sample size rather, is not what we have today. Times have absolutely changed. So the thing is this for you. When a stock splits, could it continue to rise and do better than the overall stock market? That can happen. And because stock splits are psychologically charged, right, they get us excited. We do videos about it, we do explainers, and people get excited about it. It absolutely could do better than the stock market based on that alone. But should you invest on that information and nothing else? The answer is no. You don't want to just invest in anything just because of a stock split. And I take this exact same logic and apply it to dividends too. I don't want to buy a stock just because of the dividend and nothing else. You need to know, what is a company? Do you think the company would do better with or without, or do you think the company would do well with or without the stock split? That's what we need to know. I want to know the value of the stock. I want to know the value of the product that they are creating and what their future and their past has been. And that is why you want to invest. And then if it does a stock split, that's just a bonus to you. If it happens to pay a dividend, then that is just a bonus to you. You want to be able to invest without the hype. Just push the hype to the side, set it over there, and then decide what the value of that company is and if it actually fits in your portfolio. That is what real investing is. What you don't want to do is just flip on social media and keep scrolling and just pick the thing that just has the nicest headline or the thing that excites you the most. Should your investments excite you from time to time? Sure, that's great, right? But again, that becomes emotion, right? Your emotions don't do math. You want to be able to separate the two and really look at this thing, look at your investments, look at your portfolios with clear eyes and make a good, sound financial decision. But here's the thing. Walmart's not going to be the only company to do a stock split this year and over the next several years. Other companies are going to do so, and what I have done is giving you a list of companies that are most likely to do a stock split, which means you have the opportunity to research, see if you like those companies now, buy them if you think they're good, and if they do a stock split, you may have even more momentum in your favor. But if you want to know what those companies are and which companies might do a stock split next, you want to check out this video right here.